Well, hello and welcome everyone. First, we're going to do a quick sound check and an audio test to make sure everything is A-OK. Today is Wednesday. It is not Tuesday, and it's the day after Valentine's Day, which means it's time for a market check and also what's new and what's coming out here at Person's Planet and what we've been doing, what we're up to, and I guess we all want to probably say how long will this ride last in the market. It's kind of from a technical analysis perspective. Let's make sure that our screen is being shared. Let's make sure that we've got everything in order from sound and audio check. Let's get that out of the way and then we'll start. Okay? So we are starting, ready to rock and roll, ready to get going. Okay. So more importantly, we've got, I guess in this incredible market environment, you got to admit it's been kind of a wild ride. We see that the market in the S&Ps today make another new record high. Every day, Donald Trump, it almost seems that a day goes by without a tweet from Donald Trump, the market makes a new high. I don't know about you guys, but I kind of haven't heard much about President Trump tweeting. I don't know if that's a coincidental tie-in factor or something we should be examining. But on a serious note, everybody, that was supposed to be a joke. I hope you levity in that. We don't want to get into political commentaries. There's enough. God knows there's enough of it. Anyway. If we could just get by one day without the word crisis on CNN's headlines, it would be awesome. So with that said, I'm only here to say that obviously the market is really, really enthralled in seeing deregulation, rollback of Dodd-Frank. There's still a lot of things coming out. We want to hear about tax cuts that have been promised, and the market is actually kind of running up a little bit on some very conflicting data from a technician's point of view. Stocks that have had earnings during this earnings season, not all stocks all of us have participated for the most part. Earnings come out and they may beat the top line, bottom line, but then they give poor guidance like Gilead Science did last week, and then the market gets just pummeled down 10%, 12%. Stocks that do well, Cisco tonight, for example, it may, it's already rallied into earnings. It's, a different kind of a beast as far as growth is concerned. But I think we can all agree that stocks that have done well have been up 3 to 5%. Stocks that kind of miss have been down 10, 15, 20%. NVIDIA last week, implied volatility, 127%. It was so rich with implied volatility, there was nothing for us to do but the one day till expiration iron condor selling call spreads and put spreads simultaneously above the parameter, the 27.29s and the 107.105s. If you're an option trader, we basically sold the premium of a 127 call, bought the 129 call, sold the 107 put, bought the 105 put for protection. Iron condor sold short. Next day, the thing came in and collapsed because NVIDIA did not meet or beat its expectation. It stayed within the range. So some of the volatility, the only problem with NVIDIA and doing that four-wide, or not four-wide, but four-time, four-leg strategy, and this is something most of you option traders may agree with, hasn't the depth and liquidity been something of question for all of us, right? I mean, we're not seeing the volume levels in options are not as strong, and the bids and asks are a lot wider now, it seems, than they were over a year ago. I'm not sure all of you guys agree to that, but a lot of the stuff that we've been doing in our trading community, we've been noting that. So I just wanted to go through a couple new announcements that's going to be happening, and we'll get through some analysis with you guys. First and foremost, if you could take a moment to look at the confidentiality notice, and again, the disclosure which states that trading is risky. Okay. So I think we all know that trading is risky. So first and foremost, I'm going to walk you through an indicator. And it may seem a little bit confusing at first, but a couple things many of you, if anything, I think there's a bunch of TradeStation users here today, the PUG user members, and I think there's a bunch of Thinkorswim users. So basically, I want to go through a couple little things on Thinkorswim, and we'll take the E-mini for example, and we'll start with the E-mini S&Ps, and I'm going to change that 15-minute chart to an hourly chart, and we're going to take a look at my second on Thinkorswim favorite tool, and it's called On Balance Volume, which I know a lot of you guys use. So with that said, we have been seeing patterns where the market's done this kind of typical stair step, and then it was right about here last Friday when that's when we got the news that President Trump was looking at what? A tax plan in the next 2 to 3 weeks. And all of a sudden that kind of launched a new fuel in the upside of the market. Now personally, I'm looking at a few things that whatever you're looking at, and let's go down to the studies and let's add a study and look at all studies if I may. And we'll go through, well, let's go to, excuse me, I'll edit studies. So in Thinkorswim, I'm sure a lot of you guys, there's, besides my indicator, there's a bazillion and one indicators to look at here, right? And I know that there's 50 different ways to look at the market. Now, very few of them look at a couple things. And if you go through here, most of these indicators have to deal with what? Price. Right? So very few have to deal with trending volume. And I mean, I'm only on the Fs, for gosh sakes, and I do know that we're still looking at Ichimoku cloud charts are based on moving averages of my favorite concept of pivot points, actually, to a degree. And then again, my indicators, linear regression, MACD, price, again, McClellan oscillator, that is one that is considered to be a breadth indicator. Now I'm just going through here just to share with you the choices that everyone have. Money flow, a little bit, if that's the Chaikin money flow, a little bit about volume combined off of the OBV, on balance volume indicator, by the way. And so we're looking at this, unless there's any new proprietaries that I'm not familiar with, and we're all the way down. You got the PPS old, the PPS new, and you guys are familiar with PPS. That's the arrows that point up that show us positive potential momentum, arrows pointing down that show negative potential momentum, or otherwise some people refer to it as a buy and sell indicator. Wonderful to use as a tool to run scans. Again, my favorite, second favorite indicator, Person's pivots. And I will tell you that I had a conversation with J.J. Kinahan, and we are in the process of adding a few new things, and we're going to be working with the TOS developers back on. First thing, that's some exciting news. So we are going to be looking at a few things to add and work with Mr. Scripps himself. So I just was a personal note, we are getting the ball rolling again. So back to looking at all of these indicators here, you know, one of the things that RSI, I mean, it just goes on and on and on. It's price-based, price-based relative strength, like Wells-Wilder relative strength index. It just keeps going on, and simple moving averages. You know, standard deviation is kind of cool. Stochastics crossover, what is that? A price-based indicator. The current price of where it stands to the look-back window of the high and low over a period of time. I'm going through and I'm just showing you most of the stuff that most people look at in a indicator are based on price, correct? It's very few things that are based on the pace of change or measurement. So again, a lot of the, I mean, there's so many indicators in here. It's you know, there's something there for everyone. And, you know, it's so funny to see all of these indicators that is available on Thinkorswim and all other platforms when we only have 4 main ingredients plus 1. We have the open, the high, the low, the close to deal with, and then we have volume. And again, we have open interest, and then, of course, then you leave into the next derivative product, and you got what? Options and the Greeks. All right, what's my point? My point is a lot of people emphasize a lot to do with price. Some people argue that price is everything. And I think it's 2 things. It's price and its condition, and it's also a measurement of what's called relative strength. Finding out, looking at possibly from institutional level top-down strategies, and people look at where should I be invested. If the money is going into banks, then I should be pouring money into the bank, the XLF, or just maybe regional banks. Is it investment banks? And we're going to be taking a look through how to formulate a plan and what kind of tools are out there that can help us to understand maybe different market relationships. And that's what I wanted to go over today, and also to design or to explain a design that we've done, if in better terms, right? How to combine maybe some classical technical analysis with maybe a little bit more advanced analysis, since this is a day and age of a lot of computer algorithmic trading. Now, it's really bizarre. Many of you might be familiar, and I'm going to change this chart over here from a 15-minute to a daily chart. I'm going to change the studies. I'm going to edit this, and we're going to go with let's change the wheel. Let's not show that. Hit OK. Let's change the wheel, and let's show this. Let's go with option expiration, and let's use a new term or a new product called Facebook. All right. So we've got Facebook up here, and what's intriguing is that this market has, about the first time, about a week ago, we were looking at this one single candle right there. Now, my work shows this is what we call a last conditional change. We said, ladies and gentlemen, the market, if Facebook closes underneath that low, and this is the point I'm trying to make with you guys, if it closes underneath that particular day's low, it would generate an algorithmic sell signal. Now, what happened is the very next day, it taunted us. It went up, it went down, and it just stayed almost right at that level. It went not less than, not equal to, it went and did what? Greater than. Those are the symbiologies for less than, equal to, greater than. It closed greater than the past or prior bar's low. The next day we come in here, and man, we came close to trading, and it taunted the market. It almost closed lower. And the next day it traded below it. It taunted traders, and then all of a sudden it closed up. Well, since that time, the market's never closed below a prior bar's low. It just hasn't done it, except for right now today. It's subtle. And here's the thing. We have a little breakdown in that small little movement. We had a kind of a breakdown in volume. So I'm here to tell you that these computer little idiosyncrasies, even though there's something missing up here, we didn't generate an arrow. There's no sell signal on a PPS indicator. So we want to kind of watch to see if maybe there's more follow-through weakness tomorrow, because let me show you a different tool. And this is what's exciting, because it may help us to uncover why and when institutional money flow goes into certain stocks and doesn't. And I think if you're an active trader, then you would know that this has been kind of an interesting market over the last few weeks. And so I'm going to switch over here, so don't get mad at me, to my TradeStation platform. Now, this is a small tool that we have been using but have refined, and this, what you're looking on your screen, is no different than what's on almost, wait a minute, almost, so I'm going to explain what's here. This is a weekly chart This is a daily chart. These are quarterly pivots, not available yet on Thinkorswim. So work in progress. These are monthly pivots. So this is a daily chart with monthly pivots. This is a weekly chart with quarterly pivots. And by the way, for Thinkorswimmers, the quarterly pivots are on their way. They're coming soon. Now, what you have is obviously the PPS indicators. This, by the way, is a chart as it says on Cisco. Now let's look in the middle quadrant because this is what we're going to focus on. This is what we would consider an unusual tool that, as I just shared, Thinkorswim doesn't really have. It's a relative strength in terms of percent change. It's a relative strength, and it's giving us a variable difference in terms of a diffuser. It's giving us a term of momentum, and it's giving us a term in percent change. And so what's really neat is that when we start to see a market go from red to blue, and I'm going to get rid of all this, what's neat, now this is Cisco, of course. So this is a daily chart, and we can turn this into kind of looking at the longer term picture, and you can see that on the weekly chart, we were just in a little consolidation. Let me widen this up for you. So when you look at it, the only reason I have Cisco up is because it had earnings today, right? So Cisco, what is kind of interesting is this is a relative kind of strength indicator that helps us to determine should we be buying the market and or is it outperforming the market, and it also gives us a couple other little ideas. If a market's making a new high, is it outperforming the market or is it starting to show a little divergence? So let's go down a little memory lane, a couple little things I wanted to go over. Let's take a look at a stock from last week, which we just mentioned was NVIDIA. So what's neat about NVIDIA is right before earnings, a couple things were happening. I wonder if you can get the inclination, not only is it at pivot resistance, but what's intriguing is that the market started to make a newer high. Everyone can see X marks the spot. This is number one. This is number two. The market started to make a newer high, point number two, and took out old high, number one. But the relative strength started to lose its momentum. Now this, many of you are TradeStation users of VIP. This is a volume indicator. This is a volume indicator in terms of percentage change. What's really exciting is that we saw that this market was launching to the upside and it was losing momentum. It was losing its relative strength and it was losing its volume momentum. So now for option expiration, different story. And I think as we were looking last week, right at expiration, that's why we said for option expiration, you know, I think it'd be kind of nice to maybe sell some out of the money calls, some out of the money puts. Let's do an iron condor because of the implied volatility. It was the right trade. And I'm sure a lot of other people saw that implied volatility and saw the same thing. But looking at technical analysis, I think it can show us where's the money flow going. Let me show you this one. About a week ago, we told people in our room one market that I was very adamant about looking at was Tesla. And I want to show you how this indicator is pretty unique and useful, guys. Now, look way back over here. It starts to show as the price starts to base out. It's starting to do what? Move up. Volume's starting to accumulate, and all of a sudden you get a PPS buy signal. Now, this was back in December, so let's move forward to last week. All of a sudden, the relative strength started to pop bright blue. This was showing that the market, and I think my number one call was, guys, this is a market that's most likely going to rally and get up and test the old highs. And where are the old highs? Well, it not only took out the old highs on a weekly basis, if we could bring that into focus with you, here are the old highs. But you can clearly see on a weekly basis, volume is moving up, and the relative strength compared to the broad market is improving. So not only is it in a buy signal, and I think every time we see the relative strength improve while we're in a buy signal, it will help us to maybe say, hey, this might have more legs to go. But when we start to lose volume and we start to lose the relative strength, we can start to uncover maybe some hidden weakness in a market. So this tool does not give you is not, and I repeat, this tool is not based on price. It's based on relative strength of the overall market. So what I have over here, which is really interesting, is a table in radar screen. And look how fantastic this, I mean, this thing is, as I'm probably more excited about having this in its current format. And, you know, these color changes are very meaningful. When it goes bright blue, it means the market's on fuego. When it starts going from bright blue to dark blue, it means it's losing its strength. But doesn't mean to sell yet. It means it's losing its strength. When it goes back into that bright blue, watch out above. So here's what's interesting. We're going to take a look at a few things here, and I'm just going to share with you the condition of the market. This is a no-brainer, and all I've done is I've got this correlated. It's correlated right now by the weakest stock to the strongest stock relative to the market. And then I've got the different sectors down below correlated from the weakest sectors to the strongest sectors. So let's kind of take a look at and see if this is something. Obviously, the volatility, the UVXY is relative to the market. It's just dead, right? So until this thing starts to improve, the volatility index is something we would be staying away from. Retail apparel. Out of some of the names that I look at, and for TradeStation users, all you have to do is insert a blank row, throw a name in there. I might even already have Ralph Lauren. I'm just going to throw URBN in there right this second. Kind of funny, Urban Outfitters, if you look at the difference here, it just correlated all the way down here. Urban Outfitters. Let me go back here and take a look at this alphabetically so I can find what I just typed in with you. Urban Outfitters. Now it's bright blue. So what's interesting is that it's bright blue, but it's starting to turn. It means that it did get a little pop in the market as Urban Outfitters was starting to go down. It was starting to lose its negativity, and then it just fired off positive relative strength. So at this point in time, when this thing, it's still positive, but you be careful of this thing until it turns red. If it fires off bright blue again, it means it's outperforming the market. Now, this is a weekly buy signal. Now, sometimes we get better weekly buy signals when we fire off what? A weekly relative strength. When we can get that combination where the relative strength on a weekly basis is starting to fire off, it means that we're going to get more sustainable longer-term trends. A daily chart with daily indicators is not long-term. It's good for swing trading. But weekly charts with weekly indicator changes is a more powerful setup for a longer-term directional trade. That's what this tool is going to help us uncover. Volume trend changes are great, and as you can see, this is, again, Urban Outfitters. The volume's not really great on a weekly basis. But how does that compare to Coors, K-O-R-S? Guys, this is a disaster. Michael Kors still hasn't given any indications of outperformance to the market. So institutions and big fund managers, they're not touching this stock with a 10-foot pole. That's what this is telling us. So if you one click, what's really neat, we can find out, believe it or not, one of the strongest stocks relative to the S&P 500 right now is Cabot Oil and Gas on a relative strength perspective. PayPal, by the way, it just turned positive the other day. It had a negative move, and it just had a 3-day run-up. Now, here's what I want to focus in on you. PayPal is just beginning to possibly pop into a buy, and on a weekly basis. Here's the weekly buy signal. PayPal could see more acceleration in the weeks ahead. Now, today's Wednesday. We want to watch this for Friday. If we go down here and we look at the sectors themselves, I know a lot of people will say, gee, the relative strength, a lot of sectors are moving up in tangent, in concert with the market. I hope you're following me on this. But let's take a look. All of these red ones right here, they're actually, while the stock market, these are sectors. This is, first and foremost, this is IYZ. That means the telecom sector. Stock market's making new highs. Telecom sector started to fall off. So it had a great run from a weekly perspective last year, and the telecom sector has been lagging. See this? It's lagging. So institution fund money probably is not going to get into the telecom sector until we start to see this turn positive. Ironically, what I have an interest in the telecom sector is sometime later this month, or towards the end of February, traditionally, telecom sector goes seasonally bullish. But if you want confirmation, is this thing really the time? And it's not like John Person wants to be, I don't want to be the only one in this trade, okay? I don't want to be the first guy in the trade generally. I want to be in there, but I don't want to be the first guy in there. I want to be in there when institutions feel like they see value. This is AT&T, and quite frankly, the relative strength is pretty horrible. Until this turns positive again, I don't know if this, for me, I think this is the killer of analyzing a market. What makes a market launch to the upside? Is it a, compression? Yeah, sometimes. Is it volume? Yes. But it's also institution participation. They're going with the winners. And that's what this earnings season's been kind of about. The young stuff's been getting stronger, and the weak stuff, just no one's paying attention to it. And I think you all would agree. I'll repeat that. The strong stuff is getting stronger, and the weak stuff is just sitting there. And we haven't heard that term, dash for trash. This market is powerful, but we haven't heard, and I know you guys have heard that term before, dash for trash. What does that mean? They start picking up anything that hasn't moved. Money comes in, and they start buying everything. Well, everything would include, like, Restoration Hardware. There's a stock that's gotten its proverbial butt kicked. Let's face it. This is a stock that has gotten its butt kicked. So if someone asked me, John, define butt kick. Okay, good. Define butt kick. A stock that was within a year and a half ago trading at 110 and is now trading at 25. That is proverbial. I think there's other terms for it, but that is butt kick. So how do I go through, and now all of a sudden, as the market's starting to show a little bit of interest, we've got a little bit of convergence pattern as the market on a daily basis is going down. It's starting to show a little relative strength analysis. So if you can learn to spot changes in the relative strength and understand what this tool is sharing with us, I think we're going to filter out some of these better trades that are setting up. And here's another one that, as far as a dash for trash, I mean, I was stalking this one, Whole Foods, and we thought we would see a decent move to the upside, and quite frankly, we never got it. We've been sitting, and I've been waiting, and I've been waiting, and I thought we would get a breakout. One of the reasons is that the volume indicator and the relative strength, as it has been sitting here, it did go through earnings, but it hasn't done anything. It still hasn't increased its relative strength or started to participate in the rally. The stock market's up, and this thing is nowhere near its highs from December. So there's a lot of stock out there that are near their 52-week lows or are starting to move up. But then there's a lot of stuff that, like the semiconductor sector, right? Here's an interesting concept for you guys to look at. How much higher can the semis go? What I'm looking at here is a very rare pattern called divergence. The sector is going up, making newer highs, the semis, and the relative strength performance is weakening. It's losing its bullish momentum. It's going from super positive to even the weekly is starting to show a loss of momentum. Look at the volume indicator here. It's showing that it's losing its positive momentum. Even on the daily basis, it's losing its positive volume momentum. So it's going up on light air. It's going on up on loss of relative strength. The semis, the SMH, is more than likely due for one hell of a pullback. And when you do see that pullback, you'll be watching and scanning for PPS sell signals. This is one that is a stay away from buying up at this level right now. So unless that relative strength goes back positive again, this is a scary market, guys. Okay? So this is going to help us to determine should we be in this sector or not. Now, here's another scenario which is phenomenal about this tool. Now, this is the Ishares Healthcare Providers ETF. And as you can see, I've got several ETFs that I'm looking at. Today was a great day. It had a nice advance. The only problem with this is here's the relative strength when it was there, and here's the relative strength that went negative today, and institutions will be looking at this going, am I overexposed to a market that's losing its performance? That's the killer. How did the market rally from a week-to-week basis? How's the market rallied from a day-to-day basis? Should I be chasing this market? Do I have testifiable evidence that maybe we're going to get a regression to the means? Number one, our volume indicator is showing that this breakout is on light volume, and the longer-term volume momentum is showing divergence patterns. So there are a little cracks in the eggs, and I'm not suggesting that everyone go run out tomorrow morning and sell the shnikes out of this, but I would say, you know, possibly as we get closer to a lot of the monthly pivot resistance and we're losing momentum and we're losing relative strength, these are the ones that institutions may start to lighten up on. And I think that's one of the things that we all should be focused on, rather than looking at, oh, it's overbought in terms of stochastics, or it's overbought in terms of MACD or RSI. What sectors is the institutions going with, right? That's what we want to follow. What sectors are the institutions going in? Let's take a look at this number. It's a low number. Now you can take a look at this little column, and you can see it's -4 and it's red. So that's the worst performing sector. And then you start to look at these light blue and dark blue. So remember, if it's light blue, it means it's beginning to maybe start to show some performance. But if we take a look at, I wanted to see the XLP, which XLP right here, it's starting to, as it rallied, it's starting to lose its performance. It's starting to show, even though it's still strong and it's got strength, notice what it's doing, the indicator itself. Is the indicator making newer highs while the price is making newer highs? Is the indicator making newer highs? Is it made new breakout in volume? And the answer is no. Now, on a week-to-week basis, it's had a nice little run, and if you look at where we were, we're not near, and this is consumer staples, we're not near new highs. So two thoughts come to my mind. Maybe it could run up, or possibly I should be looking for testifiable evidence that this thing's due for a pause. After all, it is at pivot monthly resistance. It's had a big move, and perhaps since the volume analysis shows that it's not showing significant volume changes after this huge run-up, it's not showing a dramatic change in volume. So guys, there are some tools that institutions are using. One of them is, I have to tell you, in an algorithmic sense, money chases money. And you know what's really neat is that in this world of not, I won't say robo investing, but in quantitative analysis and in the world of, I think, the money management field, registered investment advisory services, you know, to get a list of stocks that are, or segments of the market, strongly outweigh. You know, they call up their clients and say, hey, you got to get in the market. And our research department shows that you got to get into the financials because it's outperforming. It's where the money is. We got to get into the financials. And you know, guys, that's exactly what's happening. Let's take a look here at the XLF. Well, yeah, it's just blistered to the upside. Look at the XLF, and even on a longer term perspective, the XLF, nice little breakout. What I'm finding curious myself, and I don't know about you guys, but the XLF relative to the market recently is starting, it's still positive. Don't get me wrong, it blew. But if this weekly turns red, that's going to have an issue. Now the short term was showing that the relative strength to the market, it was losing steam. Now it just broke out a new breakout. I get it. It broke out of the highs in the last 4 days. We just broke out. Did we break out of the XLF on strong volume? Well, that's the question. And quite frankly, here's a volume reading there, and here's the volume reading here. Is anyone curious if this is a moving average in terms of percent of volume? Is anyone curious as to how the hell did the thing get up here on light volume? And if the stock market's up and it's led by the financials, is anyone curious as to find out how come the financials isn't seeing stronger growth? So the relative performance and the way it got there right now is going to be leading and should lead a professional trader to a big old question mark in his mind. Do I start buying it now, or is there a little regression to the means coming soon? And I hope you come to the conclusion that there's probably a regression to the means coming. Because that's, you know, part of technical analysis. You know, and it is not an exact science. It's an art. But there are tools, and here's the key. If we understand that institutions are driven, who guys control the money or are capable of leading their wealthy investors to the money, you know, they're the ones that bring the horse to the trough of water to drink, baby, right? And if they come in and they finally buy it up, and you know, let's face it, a lot of institutional investors did not just buy the financials this week. A lot of people have already been in the market for a while. So this has been, I'm not saying people are going to liquidate, but I'm saying that right now you stand a stronger, based on these indicators and based on the relative strength of the market, a higher probability that you see a pullback. Now let's look at one other thing real quick. The XLF is a diversified financial ETF. It includes the CME, regional banks, big banks, and insurance companies. So what I like to do is take a look at the subsectors of the market. Let's take a look at the KRE together real quick, because you'll notice that you've got KRE at 1.63 down here, the XBD, which is the broker dealers, the financials, biotechs, and then the banking index, the BKX. All right? BKX is the banking index. Unbelievable. Thing is on fuego. The thing just fired off on all cylinders. It's breaking out. Everyone's got to get in the banking sector. If everyone's got to get in the banking sector, please explain to me why it's starting to lose its relative strength to the market in terms of percent change. That's a warning flag, folks. I'm not saying it didn't generate a sell signal, but it's a warning flag. We're up against the pivot resistance, and the relative strength is starting to show signs of nothing is kosher here in the Bankville world, okay? So I would have to say, as far as if you have the feeling, and I think traders have gut feelings, not because you woke up one day and said, I'm going to go short the BKX. I'm going to go short the KRE. I'm going to go short banks today. It must come from a gut feeling, from at least information or something you've been tracking. Most people don't even know that there is the KRE. So regional banks, no one's going to wake up one day and sell that. If you have a gut feeling, it's because you've been following something subconsciously. You know, over a period of time, it's gone on too long possibly, and then you get that quote-unquote gut feel. But looking at testifiable indicators and evidence to say, how is it doing, and is it advanced a little too far, too fast, and is it still forming a relative strength against the S&P 500? What would be really neat is to get that information back last summer and say, gee, it's starting to outperform the market, and every week it was starting to outperform the market. So now that it's here, it's starting to lose its relative strength. Didn't say you get short it yet, but we say watch out, because it's losing every week. It is starting to lose its relative strength performance. And that is something that, by the way, in the next week or so, this is a weekly analysis, and on a daily basis, this is going to catch maybe the eyes of what? Institutional traders that may be too heavily exposed. So, I mean, at this point in time, we've made higher highs and we're making lower lows. That is an indicator that is showing divergence, and that is a scary aspect for, is this rally got a lot to go? Well, you know, the rally can go if we start to do what? If telecoms pick up and this goes down. If energy starts to go up and that goes down. If utilities go up and XBD goes down. If semis go back up and regional banks go down. So if what we need to watch for, if some of these start going less positive and some of these start going more positive, that's what we got to watch out for. But if all of a sudden we start to see sector after sector after sector after sector start to change from positive to negative, and the more sectors that start to change from positive to slightly more negative, guys, that's when you have a quantifiable evidence that the market is reaching a plateau, and then we'll start to see what's called a regression to the means. So we are getting that, and when people say, gee whiz, man, this market, everything is firing on all cylinders, I'm here to argue, not really. The market's breaking out to new highs. Energy's not performing. The market's breaking out to new highs, and I'm not sure about you, but the market broke out to a new high today. What brought us up here to begin with earlier this year? The materials, right? Didn't the XLB help to bring the market up earlier this year? And guess what? How come it's not making a new high? Relative performance right now for the week, it's gone negative. That's a big uh-oh, friends. So this is a tool that can start to give you a quantifiable bit of evidence that's not based on anything in price, but helps to measure where is the market strength, and keyword, leadership both up and leadership both down. So what's exciting, and I'm going to show you a couple things real quick. Now, this is an indicator that will be available for Thinkorswim, but it's not going to be on their platform for everyone to use. Traders, if you're interested in learning about and having this, we are offering this to the general public for $895, and we have 2 classes, 4-hour sessions to teach everything about this indicator, Saturday, February 25th from 9 to 11, and Saturday, March 4th, 9 to 11. These will be recorded and will be archived for all users to have. In addition, you will receive the install file on Saturday, February 25th, for Thinkorswim. So Thinkorswim users, you will have that file. This is exciting news for you guys because this is a one-of-a-kind indicator that is not available on any platform other than TradeStation and right now the Thinkorswim users. Now, if you're not a TradeStation user, if you're somewhere else and you want to be, and you don't want to do TradeStation, that's not a problem, or you're thinking of doing TradeStation, or you maybe want to get back in the game and you want to do maybe Thinkorswim. Okay, fine. Let me just show you. If you go to resources and you go to industry links, if you want to open an account at Thinkorswim, then just click on that promo link. If you want to open an account at TradeStation and get started, then go to TradeStation. Right there in that link. Now, if by chance you are a PUG users group, now this is very important. Anyone who is a TradeStation lifetime VIP member, if you are a VIP member, your annual membership is $11.29. All you need to do is show up Saturday. This indicator, as we have always told you, any upgrade to my personal indicators and updates to my scans are just part of the PUG Group VIP membership. So that would be no additional fee. It is free for all TradeStation users. Now, if you are a TradeStation user, but you also are a Thinkorswim user, we'll have to talk about that, and there'll be information at the end because we still have a lot of programming costs involved. All right? But in the meantime, if you are a TradeStation user, you are going to get this file. More importantly, what's neat about TradeStation is in our radar screen with the high closed doji, the low closed doji indicator signals. Okay? Just to let you know, that will be built into the radar screen for you right here, and you will be able to get that indicator on your charts so that all you have is one click on your radar screen. If you want to have the PMC indicator built in like this page right here, done. You'll have the ELD file. So I don't want to be confusing, but if you're interested in this, Thinkorswim, $895 comes with the indicator and the training course as well. That's 4 hours of training on how to use this indicator and put it together on Thinkorswim. If you're a TradeStation VIP member, guess what? You signed up and you paid. This is the kind of thing that you get as a VIP member. So if you have the lifetime and you want to be a VIP member, no problem. We'll take care of that as well. And you will also get all the indicators such as the HCLD and all the scans that we have built. And that would be the scans that are probably running in the background right now for our buys and our sell signals in the various markets. So I just wanted to come out and let everyone know what we are looking at and what I think is probably one of the most exciting tools that I think has hit the planet, not just Person's planet, but I think this is one of the most amazing and exciting tools on an institutional grade level that will help investors to say, really, am I buying or selling a stock that is underperforming or outperformed, or is it starting to begin to build momentum, or is it losing market share momentum relative to the broad market? And I can see that based on two simple little columns. And all you have to do is be not, you got to just understand a little color coordination, number one, and number two, you'll be able to look at some of the stuff which is kind of interesting because, like, for example, I just punched on something blue, which turns out to be Nike, right? So what's interesting is for VIP members, so you're a TradeStation VIP member and you have already the volume indicator, right? So if you were a VIP member of TradeStation, you have this volume indicator. Here we're looking at kind of a volume push, but you see something that's interesting based on the weekly basis. As far as relative strength is concerned, it's starting to lose its negative relative strength, and it started to go positive relative to the overall market. And there's Nike. So, I mean, if you're an option trader to say, should I be selling premium, and if the market is starting to outperform, maybe I should be looking at some bullish buy setups. So this tool has been kind of keeping me a little busy creating it, testing it, utilizing it, and I'm here to tell you, I'm real excited for the release to help people watch for the right turns in the market. And that's why we call it the person's market catcher, because I think it's going to help us to catch and define better trends in the market. So we've all heard about relative strength, but turning it into terms and using percentage changes and getting some advanced studies behind it and being able to label it in numeric value is pretty snazzy. And that's what I'm excited to bring to the table. And for all the TradeStation users, if you're a VIP, it's all yours. All right, so we'll get that. Don't flood us, and you're not getting it tonight, but we got to get your ELD files, and we got to get them, the customer, your customer numbers and your accounts, and we'll get those to you. So we're pretty much just introducing this to you, as well as showing you some testifiable evidence on the background of the market right now. How truly strong is this market? Well, you know, ironically, it's not as, to me, and looking at this indicator in volume studies, it's leaving, and this is, by the way, the home builder ITB. And if you look at the ITB, market made a new high, ITB didn't. In fact, ironically, it's kind of showing me, and I don't know about you guys, but volume's not great. I don't have a sell signal yet. There's no sell signal yet. But relative to the market, it's not outperforming. On a weekly basis, it's still strong, but boy, look what that yellow line's doing. It's pointing down. It's starting to lose its positive momentum. It's turning from positive. It's starting to go a little neutral. And if this weekly fires off negative, I mean, I'm not saying we're going to go to, you know, ground zero and go into DEFCON 4 dive mode, but it's kind of interesting how the market is losing its relative strength in the ITB. If the media is saying, hey, you know, I don't want to say that media puts out fake news. I don't want to say that. I'm just saying that if people say, gee, ITB is the place to be, you know what? The indicator's pointing a different direction right now. So until we get better volume reading and until we get stronger relative strength, I would have to argue I don't think the relative strength or the performance in the housing ITB is performing very well. In fact, we are, and I just bring this into perspective for you. I mean, check this out. The market's up against, in fact, today closed up against old highs. And if it was going to go up and was going to show positive performance, guess what, guys? I would think that the performance, just like it did here, and just like it did here, and as it starts to show negative momentum, the higher the thing goes, it gets ready for a dump. Just like it did here. The higher this thing goes, all of a sudden you start to see the market go, and then the relative performance changes negative. Bingo, right? So if the relative performance of the housing is, if it's doing so well, guess what? When this thing fires off a sell signal, odds are, if this goes negative to the market, you're going to get a nice little pullback in the market. So this is another big warning sign. It's indicating a warning sign. So anyway, this is going to be an incredible tool and a wonderful class. It is going to be powerful for you as an individual investor to figure out, man, is this the time to be in this sector, or should this be in that stock within that sector? And I think that for all of you guys, for my TradeStation clients, for VIP guys, I hope you enjoy this. I'll see you Saturday, February 4th. For everyone at Trade Station, I'll see you, I think tomorrow anyway, on our weekly Trade Station morning briefing. For Thinkorswim users, I will be in Boston at the MIT group this Friday night, and I think the AAII group is meeting and converging to hear me speak. So that'll be at the MIT in Boston. I want to give a good prop to Bob Pott out there. Probably shouldn't have mentioned his last name for anonymity purposes, but anyway, I'm looking forward to go up to the folks up in Boston. Beantown's always awesome to go to, and if you do have any questions, you can certainly come visit us at personsplanet.com, number one. And by the way, for all VIP Club members, don't forget, you always have access to that 3-week mentoring session that we did back way last summer, not that long ago actually. If you have further questions and you want more information on this, certainly feel free, email mperson@personsplanet.com. Give our office a call, 561-655-1881. And if you want more information on this product, by the way, all you have to do is go visit our link that I just put in. It's personsplanet.com/PMC, and it's right there, and it'll list exactly what the indicator and everything is right there, and you can visit that link that's already been posted in the room. I hope you got something out of this. At least we had a look-see at the market, number one, to say, is everything hunky-dory? Is the market going up forever? A couple things are in question. Facebook, a couple things are in question. The semiconductors. I think we will get what it was termed a regression to the means. And I think a lot of us as traders are thinking it's got to come 1 hour, or is it going to keep going up forever? Remember, I think it's, important to look at the relevance of certain sectors. The telecoms, the energy, semis, some of these sectors, everything's not firing off on all cylinders. So do your own homework, your own investigation. Some tools are helpful. This tool is amazing. It does unequivocally give me immediate information on the relevance of the strength compared to the overall market. So with that said, I hope you found an interest in another indicator. I mean, seriously, guys, I think this is probably, putting this together, to me, is more important and will be more useful in the months and years ahead than the PPS indicator. I mean that sincerely. Persons pivots and the PPS indicator are very powerful tools in Thinkorswim and elsewhere. But I think this tool is going to help keep our, not just sanity, but also help us uncover and not just to anticipate, but better trading opportunities ahead. And that's why we've called it the market catcher. So I wish you the best. If you're in Boston, I look forward to seeing you Friday night. If not, I'll see you Saturday, February 24th in class at 9 a.m. Eastern Standard Time. Until then, thank you everyone for attending. Have a great